Good day, everyone. So today I just want to talk about breaker blocks because the last video I posted on YouTube, I was getting comments and messages on both TikTok and YouTube from people asking me to make a video on breaker block. That even from the post I made, they were finding it difficult to identify the breaker block. So I just want to talk about it here. So identifying breaker block is actually easy. It is not that stressful. It is not hard. It is easy. So firstly, if we want to identify our breaker block, we need to know where we are expecting that breaker block to be. For us to actually know where we are expecting that breaker block to be, we need to understand, we need to know our trend, which is how market move, the downtrend and the uptrend. So in a downtrend, we have this here. We have market creating series of what? We have this low, we have this high, we have this what? Lower low, then we have this lower high, we have this lower low, we have this lower high, we have this lower low, we have this lower high and this lower low. This is just the basic downtrend. So now, where are we expecting this breaker block to be? So our breaker block is expected to be at our lower lows. In a downtrend though, this is for a downtrend. While for the uptrend here, the breaker block is expected to be where? At our higher high. Okay, so our lower low is where we are expecting that breaker block to be. So which is here. Right here. We're expecting this breaker block to be here. So this is our breaker block here. This here too is our breaker block here. This here too is our breaker block. Why here is our order block? Why this is our order block? This is where we're expecting this order block to be here. Order block here. Order block here. So now, when they say breaker blocks are just filled order block, it is 100% true. Breaker blocks are filled order block. So you just have to have that in mind, that breaker block are filled order block. As long as you can identify your order block, you can identify your breaker block. So for us to now, let's talk about order block. For us to actually identify our order block, there is this candlestick pattern that we pay attention to, which is the engulfing pattern, right? The engulfing candlestick pattern. This is one the candlestick that we pay attention to, that will help us to be able to identify our order block, right? Good. So now this is how the engulfing pattern looks like. Right here, this one here, this is what? This is the bearish engulfing pattern, and this one here is the bullish engulfing pattern. So now, for this bullish engulfing pattern here, for this bearish engulfing pattern, if we want to take a sell, we're expecting market to do what? To come back into this body side here. Or if you want to cover the wick, this is just an example. So I just want to use this as an example. This is not a real trade. So now, as this guy created this order block here, bearish engulfing, it is expected to drive price down. True or false? True. So let's see here, this market did something like this here. This is a created this bearish engulfing. So what are we expecting? We're expecting this market to come back into this place here, then do what? Then sell. So now, in this scenario now, market now happens to do this. Instead of this engulfing here holding for a sell, market now happens to do what? Violate it. So this engulfing here that market has violated now is now going to be used for buy. Remember, this was a bearish engulfing that wanted to use to sell, that the market would have used to sell, because bearish engulfing is meant to drive price down. That is just the idea behind it. For them to call it a bearish engulfing, it is used when you are trying to sell. So we're expecting this bearish engulfing to sell down, but now it did not hold for that sell. Market violates it. So this bearish engulfing here is now going to be used to buy. Since it did not drive price down, it will now drive price up. So now, after market violates it, this is what is going to happen here. Market is going to come back to it, then use it to buy up. You just have to be able to identify this engulfing pattern. So if you can identify this your engulfing pattern, then you can identify your breaker block. So breaker block are just basically failed order block. You can see the other block, this other block here, failed to drive price down, Then what happened? It failed to do what? To drive price down. So what happened? The market now used it. After violating the zone here, we had our break constructed here. What did market do? Market now used it to do what? To buy up. So this is just the idea behind it. Same thing for this bullish one here. We have this zone here. We have this zone here. Push up. Then we're expecting this guy here to do what? To use. This is a bullish engulfing. We're expecting market to come back to this bullish engulfing for it to drive it up, since it is called the bullish engulfing. So now what now happen? Market now violates this engulfing pattern here. This bullish this bullish order block, this bullish order block. So market now violate this order block here. So after violating that order block, what is now going to happen? Market is now going to return to it, then use it to do what? To sell. This is just the logic and the idea behind it. You just have to understand these things here. So this is why it is called the failed order block. Because now what happened? This is a bullish order block, right? This bullish order block failed to hold, to respect that that name, which is bullish, to drive price up. So what will now happen? Since it failed, market is now going to use it to do what? To sell. After price violates the order block there, what will happen? Market is now going to come back to it and use it to sell. So this is just the idea behind it here. So I'm going to try to show you guys an example for continuation and for reversal. So this is the continuation pattern. So let me quickly use this as the reversal. So this is the reversal pattern. So let's see now here. This market is downtrending. All these are our order block here. This is our order block. This is our order block. This is our order block, right? So now we're expecting the market to do what? To push up into this order block here and sell, Abi. To push up into this order block here and sell. Let's say this, remember, this is our breaker block. We have our breaker block here. We have our breaker block here. We have our breaker block here. So now I'm talking about reversals, not continuation. So we have our breaker block here. We have our breaker block here. So we're expecting market to use this breaker block. Let's say there is a liquidity. Let's say there is something like this, right? There is this liquidity here, a tiny liquidity that mitigated this zone. So if this liquidity mitigated this zone here, so market is definitely going to pick the next POI, which is this order block here. So let's say now we're expecting market to use this order block here and sell. So what will happen? To sell, since this is a bearish order block, so a market happens to do what? Violate that order block. So if market violates this order block here, so now we have gotten a new breaker block here. So this order block here that failed to drive price down has now turned into a breaker block. So now for us to actually know, okay, which breaker block is going to be active, is going to be valid, we now have to know where our liquidity is. Liquidity is very, very important if you are trying to pick our point of interest. Know your liquidity, then use your use the closest the rules in picking your POI, for you to actually know the right POI to use. So now automatically, since market violated this order block here, this order block here has turned to a breaker block. So what will happen? If market creates this liquidity like this, push up, then what? We're expecting this market to come back to this breaker block here. Since this is the liquidity and we have a structure shift right here, so market is expected to come back into this breaker block here, then what? Then buy up. Same thing if market violates this breaker block here. Remember, this is another order block here. So if market violates this order block here, what is going to happen? We're going to, if we get our liquidity, market is going to come back to that breaker block there, then buy. Same thing, market violates this one here too. Market is going to do what? It's going to come back to it, then what? Buy. If market violates this one too, it is going to come back to it, then buy. Just note, it is not this simple on a live chart. It is not this simple when you are trading like real. Market will not just be respecting your zone just like that. No, it is more complicated than this. So this is just the basic explanation, so you can just get the idea behind this whole breaker block and all. So we just have to know this is our order block. If that order block failed to hold, then we cannot say, okay, good, this is our breaker block there. So this is it here. So all these are order block. The order block failed to hold. So I'm going to label them OB. I'm going to label them OB. So all these are order blocks now that fail to. So they're now breaker blocks. So I'm just going to label them BB when market returns back to the BB. So this is our breaker block here. Same thing for this bullish here. For this bullish one here, we're expecting this market to come back into this zone here to keep on buying. Let's say there is a scenario whereby this breaker block has been mitigated. Market will come. We're expecting market to use the closest POI, which is this order block here, to push up. The market happens to do what? Violate it. So it's going to use this breaker block here and sell. If market violate this one too, it's going to use this breaker block here and sell. Violate this one too, it's going to use this breaker block here and sell. Violate this one too, use the breaker block here and sell. So this is just the basic explanation on these breaker blocks. So we just have to know this logic behind it. So now this is just the idea behind it. So now let's now talk about them on the chart. So remember what I said. Let's now talk about the continuation, which is this here. Which is this now. So let's say here, we are expecting market to do what? To come back into this breaker block here. This is the breaker block here. We're expecting market to come back into this breaker block here now. Good. So now this is where our breaker block is here. I think this is where most people tend to get confused. Sometimes, remember what I said, that for us to actually identify our order block, we need to see that engulfing pattern. So sometimes markets will not create that engulfing pattern around here. Market will not create that engulfing pattern around here. Market will create something. There's another candlestick pattern that we call the harami pattern. So market will not create the harami pattern there. I think that is where most people tend to get confused. They are not seeing engulfing, so they feel like, where is the breaker block? Where is the breaker block? Where is the breaker block? it is there. Just have that logic, that that idea that all this zone here, this low here is where our breaker block is. All this left side here is where our breaker block is safe. Then here is where our where our other block can be. This back side here is where our breaker block can be. While this front side here is where our other block can be. Right? So anything here in this as the market is coming back down, as the market is coming back down like this, let's say market is coming back down like this, all these things, anything here, any other block here, any engulfing here is our other block. The market is pushing up here, any engulfing around this zone here, as this market is pushing up, is going to be our breaker block. Then if market is coming back down, any engulfing as this market is coming back down here is going to be our other block. Are you guys getting me? Any engulfing you can see as this guy is making this impulsive move is going to be our other block. Why as this guy is pushing up into this zone here, creating this corrective move, any engulfing that you see there is going to be our what? Our breaker block. So now we can have multiple points of interest in one setup. So it is now our liquidity that is now going to let us know the right setup, the right zone to pick. So now we can have this other block here, we can have one other block here, we can have one other block here, we can have another one here, I have another one here. So these are other block that is not going to be used as breaker block. So we can have one here. So now let's now see, we now have a liquidity like this. Our liquidity now mitigates this one here, now stop somewhere around here. So which zone now is not going to be our next zone to use? Of course, it is going to be this breaker block here. If there's no other block around here, it is going to be this breaker block here. Then what? Market is not going to sell. So all this left side here, any engulfing that you see around here, any engulfing you see why market is creating this impulse and corrective move is our breaker block. While any engulfing you see around here when market is creating this impulsive move is our other block. So that is the idea behind it. So now let's quickly go over to the chart. Let me show you guys this thing on the charts. Okay. It was a place I marked out to use. Alright, so this is it here. So right here we can see how this guy was pushing up. Firstly, let's check this move here. So we can see that this guy here is uptrending. Let me start from here. You can see this low, you can see this high, you can see this low, you can see this high, low, high, low, high, low, high, low, high, low, and this high here B. So now all these levels now we can see this is a low again. This is an internal low, this is an internal high, internal low. Then market takes out this external high here. So what happened? So market started pushing back down. You can see right here, market violated this low here, right? So now if you are looking to take a buy all around here, let's say we are looking to take a buy all around here now, seeing this break of structure, this internal break of structure that happened here, and this liquidity here, you can see this liquidity mitigated this breaker block here. So this other block here is going to be what? Our next target for us to use as entry. This other block is going to be our next target for us to expect market to come down here and buy. This is not the I'm just trying to make you guys understand how this breaker block works. This is not the this trade is not even a trade that we take, but I'm just trying to use it to give you guys an example. So we're expecting market to come back into this other block here, because this is a bullish order block now. For it to come back into this other block here for it to buy. So what happened? You can see what happened here. Market violated it. Market violated that other block. But now happened, this other block now is now going to turn towards breaker block. Can you see? What did market do? Market broke it, came back to it, violated this other block here, then came back to it, then used it to sell. Can you see it? This is how we can actually identify our order block. So you can see right here, we also have this one here. We also have this other block, breaker block below here, while the liquidity mitigated it. So if I go to another time frame, you are going to see this differently. So that is it. So now look at this one here. Right here we have this break of structure here too. After market tapped into this zone here, it sold another break, pushed up here, then dropped. So we have another break of structure right here. So right here we have this breaker block here, we have this breaker block here, we have this other block here, we have this other block. Remember what I told you guys, that anything we see around here is our breaker block, that anything we see around here is our other block. True or false? True. So you can see it here. All these zones here, all these zones at this backside here is our breaker block. But now this is now the major and the major breaker block, which is this one here. So now you can see what happened here. On this time frame here, this one is showing, this zone here is not showing that engulfing. So now if we switch to another time frame, we are going to see that engulfing pattern. Are you guys getting me? If we switch to another time frame, we are going to see that engulfing pattern. So right here we have our breaker block, we have this other block here too, we have this breaker block here too, and we have this other block here too. So now it is now with our liquidity, and it is now with our liquidity that we can now know the one that we're going to use. So now let's switch to another time frame. So let me go to the 1 hour chart. All right, good. Now you can see the engulfing is there already. The engulfing pattern is there already. You can see it, Abi. The market is not creating that engulfing. So now this engulfing here now, you can see after market violated this zone here, because market is obviously downtrending. After this break of structure, what happened there? Market came back into this breaker block here, because this is the closest. So if we identify our liquidity, this breaker block here is the closest. So what did the market do? You can see the market came back to it. They used it to sell. So this is just basically it here. So if you look here too, you can see that this one here is also another breaker block here. This is also another breaker block here too. Hold on. This is also another breaker block here too. First breaker block, second breaker, third breaker here, and this other block here. True or false on this time frame. I'm just talking about the point of interest available on this time frame. So you can see how we had multiple POY in this one setup. So it is not our liquidity that is not going to let us know that okay, this is the closest POY to liquidity. So we can use this week here as our liquidity. So using this week right here, which zone is the closest to this week? Of course, it's this first one here. Of course, it's this first one that is the closest to liquidity. So that's why market is going to come back to it and use it to do what? To sell. So that is basically it here. So if you keep going, you're going to see another one. So you can also see here too, we had this we had this break of structure right here. You can see this first pullback in liquidity. So which zone here is the closest POI to this liquidity? Of course, it's this breaker block here. You can see on this time frame here, this breaker block is showing us that harami pattern. But if we switch time frame, we are going to see the engulfing pattern there. So let me try to switch time frame to see if I will get it. Sorry. So let me just go to 45 minutes and see. Can you see the engulfing there? Can you see the engulfing there? If you are to enter this trade here, even if you enter your trade from here, you are good. But me, I enter this trade from this place here, just for extra confirmation. So you can see the engulfing is there. This is the breaker block here. Can you see it? And market came back to it and used it to do what? To sell down. Just because of what? We're able to identify our liquidity. With our liquidity and our structure, then we know that okay, the closest POI to our liquidity is our breaker block. So in this particular scenario here, we had only 2 points of interest here, which is the one breaker block and one other block. This is it here. We had this breaker block here and this other block here. So we had only 2 POI. So this one here is the closest POI to our liquidity. We need to always respect that rule which says the closest POI to our liquidity. Follow it. So this one here is the closest POI to our liquidity. So that's why market came back to it and used it to do what? To sell down. So that is it there. So let me see if I can get other examples. Okay, there was something that happened recently. Alright. So right here now, we can see right here, what do we have here? We have this breaker block here. We have this other block here. This is an other block, Abi. That we're expecting market to do what? This guy here, this market, we can say that right here, this market is downtrending all around here. Just by following what is happening here. We have this low, we have this high, we have this low, we have this high, we have this low, Abi. So this is our order block here. So we're expecting like okay, a tiny reaction, even if it's a major push or a tiny reaction, but this is an order block and a bearish order block. So this bearish order block is expected to drive price down. We are not going to, like, I'm not just going to take a trade once I see any other block. I'm not just going to take a trade because of it is called a bearish order block. Does not mean I'm just going to jump into that trade. I'm just trying to make you guys, when I say we are expecting this market to drive from, I'm just trying to make you guys understand the logic behind this whole order block. Because bearish order block is meant to drive price down. So this is why this is a bearish order block, because this is a bearish engulfing pattern. So it is a bearish order block here. So we're expecting this guy here to make any reaction from there. But that scenario, what happened? Market violates it. So what happened? So this other block here is now a breaker block. You can see after market failed to use it to do any reaction, market violated it. So what happened? He put back into it and used it to do what? As breaker block. So this is now a breaker block and pushed up. Can you see it? So there's also another one around here. So let me check for it. I think that one is visible on the 1 hour chart. Good. So you can see right here too, we have another what? Another other block here. The market can actually use to make any reaction. So you can see it here. So this other block here, you can see market violated the other block. market violated the other block here, then what, pushed up, created this liquidity here, then what, came back, used this other block that failed to hold and use it as breaker block. So you can see what happened here. The market pushed up all the way. So that is just basically they just understand this whole logic. If you're able to spot your other block, you can spot your breaker block. Breaker block is just basically failed other block. So if you can spot your other block, then you can spot your breaker block. For you to spot your other block, you need to know your engulfing pattern. And if you don't see, let's say you are dealing with the higher time frame, which is you are dealing with the higher time frame, and that your low, like what I said before, your lower low in a downtrend is where your breaker block is expected to be, while your lower high is where your other block is expected to be. So for an instance, you did not see that engulfing here and you see that harami, it is okay. Switch time frame, you are going to see what you are looking for. Switch to another time frame, you are going to see your engulfing there, you are going to see your other block or your breaker block. Just switch time frame, then you pick your entry, set your good stop loss with liquidity protecting that POI. You need to also understand and follow your rules in picking your POI. When you follow your rule in picking your POI, it is not going to tell you, okay, am I going to use breaker block or am I going to use other block? So I'm not here to start talking about all these how to use rules in picking POI and everything. So I just want to talk about breaker block. So I just hope this video helps you guys understand how to identify your breaker block and all. Thank you guys.